Hi, this is Steve and Susie Neal with the Neal Estate Group, Berkshire Hathaway Beach Properties of Florida. Perhaps you're an individual when it comes to the real estate market who's recently hit the pause button. Maybe you're concerned about these higher interest rates or other economic worries. Well, Susie and I certainly can't tell you with any certainty where the market is headed, but we can give you the facts and we can give you our opinion, which is what we're intending to do here. Now keep in mind, we're going to be talking specifically about 30A, but this actually applies to the whole Gulf Coast region in this area.
So with this as a backdrop, we're going to be giving you some statistics on detached single-family homes along 30A. Keep in mind that we're also going to be including stats for Origins neighborhood, which is on the north side of Highway 98. So in a word, our market is slowing, but the slowing market is somewhat camouflaged by the fact that our average sales price in this area for single-family homes has really increased. You know, since the 1880s, the United States has had approximately 18-year real estate cycles, 14 years up, 4 years down, with some neutral years in between. Now, these cyclical shifts in the market are not only beneficial, but they're very necessary. Now, there have been parts of the United States, regions of the United States, that has not seen this sort of pattern. Southern California was an example. In the 1950s and the 1960s, Southern California bucked this trend, and rather than having a pullback in the market just paused. Then it had an upward trajectory again.
And keep in mind, the reason that Southern California bucked this trend is because you had so many people trying to move there. Well, guess what? We've got a lot of people trying to move to this South Walton 30A area. That doesn't mean we won't have a pullback, but it does mean it could potentially mute the typical real estate cycle that you normally see.
So interestingly enough, the peak of transactions along 30A happened in June of 2020. We had 230 homes sold. In July of 2020, we had 222 homes sold. Now, if you were to take that number and compare it to July of 2021, there were 143 homes sold. So that was a decrease of 33%. Even more so, July of this year, we only had 70 homes sold. So that was a decrease of 51%. Now, September of this year, we had 64 homes sold, and in October, we are anticipating 50 to 60 homes sold.
So you can also look at these stats on an annual basis. In 2020, we sold 1,709 detached single-family homes along 30A.
And you've got to keep in mind that year was the COVID year. So the first 4 months of that year, everything shut down and we had beach closings.
So you look at 2021, when we didn't have any closings, people were kind of over COVID to some degree. We had slightly more, 1,863 homes sold. But this year, it's probably going to be more like 1,200 to 1,300 homes sold. And interestingly, you look at the pre-COVID years, 2017, 18, 19, we actually averaged about 1,000 transactions per year. I wouldn't be surprised if next year we end up approaching a number similar to the historical average. So when you look at all of this, it's no surprise that we are seeing more inventory and price reductions. Now, 8 months ago, the average list to sell price was basically 100%, maybe in some cases higher, as you had people trying to outbid each other. Now it's about 95%, if not lower, because some of those houses have already had their prices lowered. You look at the inventory. End of February, we had 121 homes for sale. As of yesterday, we had 475 homes for sale. That's a 292% increase over the last 7 to 8 months. At our current rate of sales, that's a little over 7 months worth of inventory versus about 3 weeks of inventory at the end of February. So we've very rapidly transitioned from a seller's market to what now is a buyer's market.
So what should we conclude from all of this data if you're a potential buyer? First and foremost, people want to be here.
And keep in mind, this isn't an area where you typically see a lot of people transferred to. People are here because this is where they want to live and raise their families.
And I don't know if you know this, but South Walton County is the 7th fastest growing county in the United States. So this area is a coveted destination, not only for renters, but for owners as well. So demand is still extremely strong. So if you're a buyer, don't be waiting for pricing to go back to pre-COVID days, because that is probably not going to happen. But with more price reductions and more inventory, you as a buyer have more power and you have more ability to negotiate on price and then do more thorough due diligence prior to closing. Also, second thing for buyers to consider, what are your ultimate goals as a buyer? If you are looking to purchase a home and then flip it in 6 months to a year, this is probably not the market that you want to be purchasing in. But if you're looking to purchase a home and stay in that home for 3 years, 5, 10, 15, Steve and I say go for it. Keep in mind that real estate along 30A has an average appreciation rate of 6 to 8% annually, if not more. So as an investor, you should expect that kind of return as well. And if you are going to rent your home, remember that every year there are an increasing amount of renters that come to this area.
And one last thing, if you're a potential buyer, Susie and I are really big believers in legacy properties and owning these for an extended period of time. These longer term investments are places where family memories are made and relationships are nourished. So if you're a potential buyer and you come across the perfect property, but you don't pull the trigger because you're worried about the interest rates or you're convinced that pricing is going to go back to where it was 3 or 4 years ago, and you miss out, Susie and I strongly believe that that's a decision that you're going to come to regret in short order. Now, looking at sellers, look, as you know, we've been having a market here where each successive sale had been at a higher and higher price point for a comparable property. Well, guess what? That's reversing. And recently, each sale of a comparable property has been lower than the sale prior. So what that means as a potential seller, if you're looking to price your property, you can't just simply take the community and the average sales price and stick that on there. You need to find the true comparable. So it's our jobs as realtors to help you do that. And not only look at the community and the average square footage and the number of beds and baths, but also the finishes and the furnishings, the whole ball of wax. And with that, help you come up with a true comparable. And actually, then it's our job as realtors to convince you to price that property slightly below that price in order to create a perceived value. Because believe me, right now, buyers are looking for perceived value. The last thing I'll say, as we've transitioned here rapidly from a seller's market to a buyer's market, a lot of times this can be a good time to reposition if that's your goal. You know, perhaps you want to be in a different community. Perhaps you want something larger, something smaller. Well, we know if you price the property correctly, that it is going to sell. At the same time, you've probably got more buying power or more ability as a buyer right now to negotiate than you've ever had before.
So just as a recap, Steve and I work very hard to be trusted advisors in today's shifting market. So if you've got any questions about any of the information that we've shared with you, or want to go into anything in further detail, well, you know where to find us.